This is Lance Bryce with Thrive Mortgage. Today is Friday, the 31st of March. I hope you're doing well. We've seen interest rates have a fairly calm few days. The Mortgage News Daily tracking for a 30-year fixed rate, that index has it at 6.57 today. You may see many lenders pricing a little bit better than that today. Yesterday, that same index had us at 6.59, so really no movement day over day. A week ago, we were significantly lower. We were 6.38 this time last week, so about a quarter point higher today than we were then in the national average. You go back 30 days, we're about 3/8 of a point better than we were then. We were at 6.85 30 days ago. So here's what's moving the markets. Today we got the anticipated personal consumption expenditures, and here's the reason that's anticipated report. It is the Fed's favorite gauge of inflation. Now, the CPI is what really moves the bond market, because if you look at a chart for the Consumer Price Index and overlay it with a chart for the Personal Consumption Expenditures Index, or the PCE, they track each other almost exactly. And when Consumer Price Index, the CPI, came out 2 weeks ago, it really took the wind out of the sails of a decent report today on the PCE. So that benefit has been baked in to where the market is. That's why we saw rates dip into the 6.38 range 7 days ago, is on the heels of the CPI report. That was, again, a little more tame than expected. The PCE report, if you take and just look at core numbers within that report, anticipated to come in at 4.7% annualized. It came in at 4.6%. So almost in line with expectations, but a little bit better. Again, the Fed does look at that carefully, but again, CPI really took some of the wind and the glory away from that report already in the markets. Dow liked it though. Dow's up 1,400 points since mid-month. So we've seen a 2-week run in the Dow that has really dramatically recouped a lot of the losses that the Dow had experienced. We were 31,861 mid-month. We closed at 33,274 today. So the Dow was up 415 points on the day, and again, 1,413 points gained on the Dow in the last 2 weeks. So that pressure of money going into equities has pulled some money out of the bond market. We probably would have seen a little more movement downward in rates, upward in bond prices today, were it not for this strong down rally that picked up a lot of the capital that would have otherwise gone into the bond market. So you're seeing a little bit of competition there in these investment tools. Here's what's next for rates. Y'all looking at the calendar, trying to anticipate the next thing that might give us a significant move in rates. We've not talked a lot on this email list around shelter costs. Shelter costs are rents. Rents over from 2020 to 2021 saw huge year-over-year increases, 21% increase in rents. That number on new leases signed is way down into the threes, low fours, high threes. So the year-over-year number is much better today than it was a year ago in shelter costs, in rents. Here's why that's important. Shelter cost makes up 39% of the Consumer Price Index. So as those 12-month leases that were signed with that massive year-over-year increase, as those start being renewed at this lower 3 to 4% year-over-year increase, we're going to see a dramatic reduction in that reported headline number for the CPI. We're anticipating that may be May, June of this year that we're going to start seeing those lease renewals take into account this lower rate of appreciation in the cost of rents. Once that happens, we're going to see a very material change in the Consumer Price Index headline number. I think that is going to be the next occasion for us to see significant movement downward in interest rates. It's one of the reasons that you have so many economists, folks that I do trust, such as Barry Habib over at MBS Highway, predicting that we're going to see rates significantly lower than they are now towards the end of the year, maybe by midsummer or so. So that's what we are looking forward to. We will see if that pans out. As always, I keep a close eye on it. Look forward to sharing that news with you. Either way it goes, we'll be talking about it. Have a blessed weekend. Stay safe, and we will talk to you next week.